Small cap mutual funds have been the talk of the town after the comments of SEBI chief about the overvaluation of the funds and stress tests which every scheme has to do every month. So, in today's video, we'll do a detailed comparison between two popular small cap funds which are quite different in many ways and also try to understand who should invest in which fund. Earlier also, I have made a separate videos on these funds. Links are attached in the description and at the end of the video. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. So let's start the video with the basic details. First, for Quant Small Cap Fund. The AUM, that is the total asset under management, which is around 17,350 crores, which is on a little higher side for a small cap fund. The expense ratio is 0.70%, which is little higher when compared to the average expense ratio of small cap schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty Small Cap 250 TRI. Now let's look at the basic details for Tata Small Cap Fund. Here the AUM is more than 6,200 crores, which is quite low as compared to Quant Small Cap Fund. The expense ratio is 0.29%, which again is quite low when compared to other small cap schemes. The benchmark index is Nifty Small Cap 250 TRI. Now let's look at the sector-wise allocation. Firstly, for Quant Small Cap Fund, from the table, it is very clear that the fund has the highest allocation to the financial sector, followed by energy, metals, and healthcare. Now let's look for Tata Small Cap Fund. Here, the highest allocation is to the service sector, followed by financial and capital goods sector. Here, we'll not go into much details as Quant has the tendency of changing stocks and sectors very quickly. And when we compare this allocation to the category, it is quite different for both the funds except for the healthcare sector. Now let's check the portfolio allocation. Firstly, for Quant Small Cap Fund. As evident, small cap shares form around 67% of the portfolio, whereas large cap shares form other 29% of the portfolio, and there is no allocation to mid cap stocks. The portfolio looks quite diversified, with 92 stocks in the portfolio, with top 10 stocks contributing to around 38% of the portfolio, and top 3 sectors form around 43% of the portfolio. The portfolio turnover is whooping 218%, which is very high, but is obvious for this fund as it has a strategy of changing funds very often. Now let's look at the portfolio allocation for Tata Small Cap Fund. Here, more than 92% is allocated to small cap stocks, whereas mid cap stocks form around 1.69% of the portfolio only. And there is no allocation to large cap stocks. The portfolio seems little concentrated with only 50 stocks, with top 10 stocks contributing to 33.60% of the portfolio, and top 3 sectors contribute to more than 40% of the portfolio. The turnover ratio is around 16% as the fund follows a buy and hold strategy. Now let's look at the top holdings. Firstly, for Quant Small Cap Fund, as evident, Reliance Industries from the energy sector and Jio Financial are the two main stocks with the highest weightage, followed by Bikaji Foods and IRB Infra. Hindustan Copper and National Aluminium are the major stocks of the metal sector. Here, one thing should be noted that too much importance should not be given to the stocks in the portfolio of Quant funds, as they have a tendency of changing the stocks frequently, and it's quite possible that in my next review there would be all new stocks in the top holdings. Now let's look for Tata Small Cap Fund. BASF India and Elantas Bec India are the main stocks of the chemical sector, whereas Quess and IDFC are the main stocks of the financial sector. Gujarat Pipavav Port and Reddington are the main stocks of the service sector. Here, if you observe, the stocks in the top 10 are not so common and popular ones. Now, let's also look at the fund managers. Firstly, for Quant Small Cap Fund, Mr. Sanjeev Sharma has been managing the fund since October of 2019, that is, since last almost 5 years, and that too quite efficiently. He has been joined by Mr. Ankit Pandey in May of 2020 and by Mr. Vaisav Saigal in April of 2022. Here, one thing should be noted that in the later part of 2018, Quant Fund House took over from Escorts, and after that, it has changed its management and the fund style. So, in the later part of the video, where we will be seeing the past data, please consider all the data from 2018 only. Now let's look for Tata Small Cap Fund. Mr. Chandra Prakash Padiyar has been managing the fund since November of 2018, that is, from the inception of the scheme. He has been joined by Mr. Jitendra Khatri in October of 2023. Hence, we can say that both the funds are having the same fund manager since quite long time, which is quite positive and an advantage for the scheme. Now let's look at the trailing returns. Firstly, for Quant Small Cap Fund. Here, we'll consider data for 5 years and less only. As stated earlier, Quant took over from Escorts in late of 2018, and after that, it has changed its style of investment. Here, if you consider long-term as well as short-term performance, the fund is able to beat its benchmark and the category with a huge margin for the entire period range, which is quite positive and expected from a fund. Now let's check the trailing returns for Tata Small Cap Fund. As the fund was launched in November of 2018, we have data available for 5 years and less only. Here if you observe, the fund is able to beat its index and the category for 3 years and 5 years period. But for period 1 year and less, it is not able to beat its index. Hence, we can safely say the fund has an underperformance in last 1 year. Here, we can clearly say that Quant Small Cap Fund is a clear winner in the trailing returns performance. But as I have always said, the trailing returns data never give a full clear picture of the fund's performance. So now let's check calendar returns for both these funds. Firstly, for Quant Small Cap Fund. Here we have data from 2019 to 2023 and also till date for this year, that is 6 years data. Here if you observe, the fund is able to beat its benchmark and category 5 out of 6 times, which clearly makes the fund quite consistent in its performance. Now let's look for Tata Small Cap Fund. Here it is able to beat its benchmark 4 out of 6 times and category 3 out of 6 times, which makes it not so consistent in its performance. Here also, Quant has an upper hand in consistency of performance. Now let's also check the SIP returns before checking the rolling returns. Here we have taken monthly SIP of Rs 10,000 for 5 years. Hence, the invested amount after 5 years would be Rs 6 lakhs, whereas total corpus of small cap fund would be Rs 19 lakhs 79,000, which translates to 49.93% annualized returns, whereas for Tata Small Cap Fund, it would be Rs 13 lakhs 89,000, which is 34.39% annualized returns. Surely, the performance of Tata Small Cap Fund is good, but the outperformance of Quant is very huge, and here also the clear winner is Quant Small Cap Fund. The difference in performance between the two funds is quite substantial. Now let's quickly check the rolling returns. As the funds were launched in late of 2018, 5 years rolling return data is not available. Hence, we'll check the rolling returns for 6 months, 1 year and 3 years period and compare to its index. Firstly, let's see the 6 months rolling return. From the graph, it is evident that both the funds have been able to beat its index 70% and 71% of times, with Quant having a better average returns and higher standard deviation. Now let's see the 1 year rolling returns. Here, Quant is able to beat its index 84% of times, whereas Tata is able to beat 78% of times, with Quant having a little better average returns and higher volatility. Now let's also check 3 years rolling return. The complete data for Tata Small Cap Fund is not available, hence the comparison is not appropriate. But still, if you want to check the performance, Tata is having a better performance in 3 years rolling return. From the rolling returns data, it can be concluded that both the funds are having good rolling returns data, but Quant is having higher returns with more volatility, whereas Tata Small Cap is having lesser standard deviation, that is volatility. Now let's see how the fund performs on risk parameters. Firstly, for Quant Small Cap Fund. First one, mean returns, that is the average return in a year, which is 37.80, which is more than both the category average and the benchmark. Here, higher the value is better. Second one, standard deviation. That is a tool to measure how much the returns have deviated away from the mean returns, which in this case is 20.09 and is higher than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio. That is a tool to measure the risk adjusted return, which is 1.63, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta. That is the volatility of the scheme compared to the benchmark, which is 1.06, which is higher than the category average. Here, lower the value is better. Fifth one, alpha. That is a tool that measures how much better the fund has performed compared to the category. Here, it is 10.62, which is higher than the category average. Here, higher the value is better. Now let's see for Tata Small Cap Fund. Here, all the risk parameters are better than the category and index. Hence, we can say that it is a good performing fund. But when we compare the returns and alpha with Quant, it lags behind. Hence, between the two, Quant is having a better returns ratio. But these better returns come with higher volatility. Now let's check the capture ratios before concluding what investors should do. First, for Quant Small Cap Fund. The upside capture ratio is the measure of how the fund performs relative to the index during the period when the index rose. Here, the value is 116, which indicates that the fund outperformed 16% more than the index during the rise period. Here, higher the value is better. It should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 71, which indicates that the fund declined 71% as compared to the index during the fall period. Here, lower the value is better. Now let's check for Tata Small Cap Fund. Here, the upside capture ratio is 88, which indicates that the fund underperformed 12% more when the index rose, which is not that good for a fund. The downside ratio is 44, which indicates that the fund has also declined 44% as compared to the index during the fall period. Here, the lower the value is better. On comparing for both the funds, the upside and downside capture ratio, the upside capture ratio for Quant is quite good, whereas the downside ratio is okay. For Tata Small Cap, the upside capture ratio is quite poor, whereas downside capture ratio is good. It has been generally been observed that funds with better upside capture ratios tend to perform better in bull markets, whereas funds with good downside capture ratios have a better downside protection in the bear markets. So now let's see what investors should do. But before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I request all of you to hit the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. Here, I would like to clarify that this is not a buy or a sell recommendation and one should take decision by himself or after consulting his or her financial advisor. This video I have made for educational purpose only and my aim is solely to provide a real insight into the fund's data. Please do not mistake this as a buy or a sell recommendation. So now, coming back to the conclusion, what investors should do. First, the existing investors. From all the data we have seen till now, we can say that both the funds have a different investment philosophy and different approach towards investment. Firstly, let's look for Quant Small Cap Fund. The performance of the fund has been quite consistent and good, so I don't feel existing investors should be worried and they can safely continue their investment in this fund. Now, for Tata Small Cap Fund, surely the fund's performance is good and is having the good risk parameters also. So, if you are happy and content with the fund's performance, you can surely continue your investment. But keep in mind that this is not the best performing fund and has been underperforming in last 1 year. So, do keep a close watch on the fund's performance. Second, new investors. Both the funds have their pros and cons. Firstly, let's discuss who should invest in Quant Small Cap Fund. Those investors who are not afraid of volatility and are ready to take more risk for higher returns. And if your investment horizon is a long term and have been investing in mutual funds, then one can surely pick this fund for better returns. New investors who can invest in Tata Small Cap Fund. If you have other funds from Quant Fund House and are looking for moderate returns with less volatility, then surely you can pick Tata Small Cap Fund. So, which of these funds have you invested or are planning to invest? Do share your views in the comment box. My personal choice between the two is Quant Small Cap Fund because I feel that we invest in small cap funds for better gains, knowing that small cap funds are more volatile and risky. So why to settle for a less riskier small cap fund? For lesser risk, you can always go with large cap funds. This is my personal opinion and I may be wrong also. What do you feel? Do share your feedback in the comment section. I would like to add that I have Quant Small Cap Fund in my portfolio and will be continuing my investment in this fund. I will again try to review this fund separately after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you are not done till now and also press the like button. Do check my older videos. Click the attached cards to watch the detailed reviews of Quant and Tata Small Cap Funds. Thank you and see you again in my next video.